YouTube, hey, what's up? Casey Dimon here, TaxSaleAcademy.com. Thank you so much for joining me as I record this episode for the Tax Sale Podcast. Now, guys, if you enjoy listening to podcast episodes, be sure to find us on your favorite podcasting platforms, and you can do that by going to TaxSalePodcast.com. That's TaxSalePodcast.com, and it'll link you right up to your favorite podcasting platforms. So let's go ahead and record the audio portion of the Tax Sale Podcast. Welcome to the Tax Sale Podcast, where tax sale investing is made easy. I'm Casey Dimon. I'm a tax sale veteran, expert, and trainer, author of the Tax Sale Playbook, and founder of the Tax Sale Academy. I'm your host right here on the Tax Sale Podcast. Thank you so much for joining me on today's podcast. And as always, at the conclusion of this episode, if you're looking to learn more about investing in tax-defaulted real estate, be sure to head to TaxSaleAcademy.com. That's TaxSaleAcademy.com. Today we're discussing the strategy that I use that took my business from a very mediocre local investment business to something that quite literally changed my life, catapulted my career, and eventually turned me into the tax sale expert. It's a strategy that I teach extensively inside the Tax Sale Academy, and it's one that I wanted to share with you guys right here on my podcast. I'm talking about cherry picking properties. Now let me provide you with a little bit of history to add some context to the strategy. When I first started investing in real estate, I invested exclusively in my hometown. It's what I knew. It's where I had contacts, where my experience was, and well, it was obviously very convenient and very easy for me. That's what everyone does, right? Invest where it's easy, where it's close. That supposedly makes the most sense. So I went to a few auctions and I bought a few properties. And there were lots and lots of properties that are available locally. And it wasn't because I live in like a bad area. I live in a great real estate area. It's not a depressed area or anything like that, but there's just plenty of properties that are available like most areas of the country. There's lots of tax defaulted real estate out there. So what I was doing is I was going to every auction that was offered at the courthouse in my local county. Usually that'd be 1 or 2 a month. Every month, I would gather up my money. Then I would choose a few properties that I knew would be the most profitable based on my objectives. My objectives were to get in, get something safe, hopefully pre-sell it if I could, get out, make a few bucks, move on to the next property. Those are my objectives. Now yours might be different. It might be, you might be a house builder that wants to do extensive remodeling and everything, get the most bang for your buck. Builders are different. Everyone is just different when it comes to what their specific objectives are. But my objectives, again, were to get in, get a few specific pieces of property that I knew I could make some quick money on, turn and go to the next piece of property, okay? So every auction, I'd buy 1 or 2 properties. I'd make some money, I'd be happy, I'd go to the next auction, and I'd do it over and over again. Then one day it dawned on me, sure, I can make a great living doing this where I'm at, but I'm always going to be capped. There will always be a ceiling to my income using this method. My income was based on the numbers and the types of properties offered by my specific county. My county was essentially limiting how much income I can make. So I began to analyze exactly what I was doing. While it wasn't to me really apparent beforehand, I realized that I was choosing very, very specific properties based on those objectives and how easily I could line up a buyer for those properties ahead of time. Essentially, all I was doing was cherry picking the best properties for me. So when I decided I wanted to expand, which I knew I had to, I really had 2 different directions I could go. The first one is I could stay local and I could open up those investment objectives. I could do some stuff that might have been a little riskier, some stuff out of my comfort zone, that kind of stuff, right? But I'd still end up being capped. Even if I bought every single property at the auction, I'm still going to be capped. But the other option is that I could open up the areas that I was investing in. I knew there's millions of properties that are offered at tax sale auctions every single year, so why limit myself to just one market? So what I wanted to do is use my same strategy of cherry picking properties in multiple markets. That's exactly what I started doing. I went from cherry picking properties just in my hometown to cherry picking properties in the county right next door. Then the county on the far side of that. Then I went to another state. Then another state. Eventually I went from investing into like 10 to 15 properties every single year in just my hometown to investing in 75 or 100 properties every year in dozens of different markets. And the more I took this approach, the more my income rose. As you start investing, you will eventually develop specific investment objectives that work best for you based on your preferences, really, among a lot of other stuff. And we're talking about things like your budget, the time that you have available, your ability to market the properties and create buyers, your comfort levels, all sorts of other things. Maybe you prefer like single family homes. Maybe you just want small vacant lots. Maybe you want that really, really dilapidated house, right? Maybe you like acreage tracts. Maybe your specialty becomes abandoned grocery stores, old schools, or some other random stuff. It doesn't matter. What I'm trying to get at is over time, you will mold yourself into an investor that likes to invest in specific things. And there's nothing wrong with that. But what you need to realize is that the market that you're investing in, there's only going to be so many properties that fit your investment objectives in one single market. What matters is the more areas you attend, the more chances you'll have to cherry pick the properties that work best for you based on your objectives. Essentially, what you can do is you can cherry pick the most profitable properties from here, cherry pick them from here, cherry pick them here and here and here, and combine all these properties into a business that will just grow infinitely as long as you continue to invest in multiple areas. Perhaps you have zero competition right now where you're at in your hometown. Hey, that's wonderful. But in order for your income to grow, you'll need to gain access to more and more properties. And I'm not going to say it's going to be the easiest thing that you've ever done. It's definitely easier to invest locally, right? As you expand, you're certainly going to experience some sort of resistance. That resistance might be from inside you, with the uncertainty of really not knowing a whole lot about the areas, being unfamiliar with those areas. And that's something that you have to overcome through educating yourself. Or that resistance might be from the locals in that area who you think don't want you there, but you must overcome that as well. So whatever the resistance you face, you need to overcome that. Get outside of your comfort zone. It's kind of like every other business model. Take any of the successful nationwide companies. They start in one area, then they expand some more. And this is exactly what is required of you in order to grow your tax sale business. If you continue to investing in your hometown over and over and over again for the next 50 years, you are always going to be capped with your income abilities. My suggestion is to start local, of course. Then, when you reach your cap there, which might come from there being absolutely no properties that fit your objectives, or you might be buying every single property there that fits your objectives. Whatever it is, you're going to eventually reach your cap. But once you reach your cap, begin to expand to another nearby county, then another county. And all the while, you should be also analyzing many different areas and even different states. Maybe there's one area that's 500 miles away that has an abundance of the types of properties that suit you best. In that case, skip everything in between and go straight there if you feel it's right for you. Cherry picking properties from multiple markets requires that you have familiarity with many markets. And this comes through educating yourself and understanding what's going on well in advance of you actually investing in that area. So while you're learning to be a successful tax investor right now, while you're investing in your hometown market, whatever you're doing, why not go ahead and allow yourself to be curious. See what's out there in other areas in addition to your hometown market. See what other types of properties exist, how their sales operates, see how their economy is. Keep all this information in the back of your mind, and in the future, you'll be able to use it to cherry pick the most profitable properties in one of those areas. And when you apply the strategy of cherry picking the most profitable properties to your business, your tax sale business and your income will begin to grow exponentially. That's it for today's podcast, guys. If you'd like more information on investing in tax-defaulted real estate, including trainings on how you can cherry pick the best properties, be sure to visit us at taxsaleacademy.com. That's taxsaleacademy.com. And before I sign off, guys, I'd like to ask you a very quick favor. We provide lots and lots of free training for you guys, and it is our absolute honor and privilege to be able to do that. All we ask is that you subscribe to us on our podcast or on YouTube or wherever you find us, and make sure to provide some positive feedback, even if it's just clicking a like button or giving us a 5-star rating. Guys, I hope you have a wonderful and successful day. Take care. Bye-bye.